Hey guys, it's Justin. Wanted to hop on and do a little review here on some of the signals that we gave on Friday that are going into the next week. Kind of let you know what we're looking for on those plays. So first will be USO. So that's going to be a play on the oil, and I'm actually using the futures market for that. And I brought up me a little picture here. Right, so this is a comparison of the futures for the oil markets compared to an ETF that we can trade with options, which is the ticker USO. So it follows it really well, and I liked it, so I decided to go with this one. So I'm going to be using as a swing the commodity future, which is this right here, the light crude oil, which you've been hearing a lot about, and going to play with that ETF that I just showed because that correlation is really strong. So that's the play with the crude oil. So real actually to start off first is I wanted to kind of show you the trend, like what I look for in a trend. And first is the moving average of closes for 18 days. So I you want to take a trade for calls bullish above this number. So it's called an 18-day of moving average of closes. So here's the settings for it. As long as you're above that, you're bullish. So the crude market now obviously has been bullish. It's looking to stay bullish. And the second confirmation I'm going to look for with that is the Bollinger Bands. Now, this looks really weird. Oh, I'm on a daily. Okay. Let's back that all out. All right, so as you see here on a daily, we're above the 18-day moving average of closes. Now I have the Bollinger Bands here. And this is the part why I like the entry for this swing. Is 95% of the time when you close outside of this band, you're going to go back down and the stock's going to go down a little bit as it retraces. And you can see here it's been above it for a while because of everything going on. Finally had the huge sell-off into a 3-hour demand, which is holding up above the 18-day moving average of closes. And now we're no longer riding up high on this Bollinger Band. So when looks like it was overbought, had a bit of a pullback, and should ideally continue up. So that's the play for crude oil, USO ticker. And same thing for those of you that are still in corn with me. It's the same idea here. Playing with this corn ETF. You can see it's above the 18-day. And wheat is same thing. So these are all bullish. Now, if you go over to SPY, not the same. So I'm going to hide the supply and demand. Here's the daily. And you can see that this is important that on Friday, we tried here at some point. But once we got towards the end of the day here, we closed off and we closed below the 18-day moving average of closes. And we're inside here, so we're not outside the Bollinger Band. So I see no reason why it's not just going to keep going down. That's so definitely bearish on the market. That's the daily. And then we have the other two tickers that, let's see here, that were signaled. So there's USO, and then we have the profit targets here, 77 we're expecting, and then 81. All right, and then next is the ROKU short that we have here. So pull this up. Same thing, you can see here below the 18-day. And here's the Bollinger Bands. It's not outside of them, so I don't expect it to have any kind of a comeback anytime soon. And here are the supply and demand levels for that one. Get that out. So you can see here, we're actually, I mean, this is so bearish that, I mean, it could, don't get me wrong, it could bounce right here and shoot up. It could. Roku could do that. But with the way I've been watching this on smaller time frames, it's just cutting through these demands like crazy. I mean, here it is again. It's just, you can see where it bounced here and it bounced here, but it didn't bounce this time. And it's going down. I mean, I think that when we get below, when we get around this 101 area, that's going to be real interesting. And if we break 100, there's a gap fill down to roughly $97 on Roku. So I'm looking at that for Roku. And the same things for BA. It's going to be, wow, it's when you see the Bollinger Bands like this on a, oh, that's an hourly, my bad. Okay, same thing. So it's not riding outside of the Bollinger Bands, it's within them. So it's good. 18-day moving, it's below the 18-day moving average of closes. And yeah, I expect this one to keep going down too. I mean, it's also, there's some demand here. I mean, right here could be technically considered a demand zone on the daily. It'd be, I would look at it more as a lower quality demand zone because the bounce was so small off of this sell-off. But here are some trapped buy orders here. But I don't know, just with the way things are going, I mean, I wouldn't be surprised if we cut through this too. So that's what we're watching right now. And then lastly, I'm just going to go back to ES real quick here. And then just pull out here on a 4 hour. And then, I mean, you can see here, it's just, this is a huge red flag right here that we're going to turn bearish when you have a candle that looks like this, where you're up here, then all of a sudden just had nothing but selling until you close down here, creating this huge supply zone. So it would take a ton of buying to fix this this sell-off anyway. So, I mean, that's where we are. Here we are on the algo. We got a cross on the 4 hour, which is really good for use for swings. You've got just now got a cross, red across the blue, and yeah, I mean, we're turning bearish here. It looks like to me. So I'm not going to be looking at calls at all unless it's a commodity space. So all those big names, those high tech names, are selling off hard. It looks like they're going to keep selling off hard. So that's what we're going to be playing. All right, that's about it for now. Thanks.